Okay, MegaWhale team, welcome back to the channel, guys. It's great to be back and doing a video for everyone. It's always weird doing a first video back after a while. It feels like I'm just talking to myself, but we're back at it and we're going again. So, thanks for tuning in. Hope everyone's doing a fantastic day. We had some great profits today so far. Scalping, some big shorts, some big longs, but let's go ahead and dive into it. Before we get into it, guys, head down to the pinned comment down below, click the link, join our Telegram channel, get access to all of our updates, analysis, and a whole range of more information. I'm going to go ahead and show you real quickly. Here is our Telegram channel here. Updates, analysis, and more in here. All of our videos are posted as well. If you're interested in VIP, you can join our VIP channel, get updates to all of our trades, all of our signals, exclusive analysis, altcoin analysis, and our trading chat over here. So there's our scalp trading chat over here. With all our members, we talk in here, post our own scalp trades. I share all my trades with you guys in there too. So if you're interested in more than just swing trades and trade setups, you want to actually trade the signals I trade, you can go ahead and access that if you're a VIP member. So click the link down below to get access to that. Let's go ahead and get into it. So Bitcoin has been moving. It's been moving a little bit and it hasn't been moving a little bit. It's kind of had these periods of consolidation, stagnation, and then these explosive moves back into consolidation and stagnation, followed by another explosive move, and just up and down, up and down. And I can feel that the sentiment in the market is getting a little bored. I feel like a lot of people are getting quite bored in this market right now, and that's rightfully so. Generally, when we have these consolidation structures, so there's any structure, it could be a horizontal structure, it could be a pennant, it could be a flag. Whenever we have these flags or pennants or horizontals, and we're getting closer to the apex, getting closer to conversion points, particularly on wedges and pennants, the price action starts to get a little bit more slow and people tend to get a little bit more bored. But it doesn't mean you should stop trading. It doesn't mean you should go away from the market. It's actually a good time to be looking for opportunities, because I like to think of it like this. The longer the price moves sideways for, the bigger the move that to follow will come. So you generally, like a pressure cooker, when you overcook a pressure cooker, it just blows up. Similar things with this sideways consolidation and then an explosive move upwards or downwards. That's kind of what we're seeing over here. We saw a very small range where Bitcoin didn't really move much from about 1.5% to 2% for a couple of days, followed by this big rally upwards that we saw in the last couple hours, all the way up to 21.82 before rejecting back down. Very volatile, explosive move out of the pennant, explosive move back down, back into the pennant, down to our support line. We're going to be talking about all of this today. So what we saw, guys, is we saw a rapid move right out of this pennant, a fake out. Of course, it was a fake out, and obviously we got a nice short in over here. I took about a $1.2 million size position on short over there, which was really nice. Sold a little early, but we still got some nice profits. We've come all the way back down, reached the support line of this pennant formation, bouncing again. We're still in the formation, essentially. We haven't made a definitive decision. We're in the formation. This is very messy formation. We've seen a lot of candles to the top side, a lot of false breaks to the bottom side as well. It hasn't been a clear pattern, it hasn't been a neat pattern. It's been a very ugly pattern. This kind of ugly patterns, they push people away as this random volatility and price action starts to act a bit weird. But what we're looking for on the broader spectrum here, we've obviously got two decisions to make. And these decisions shouldn't be made while we're in a range. While we're in the range, we're looking just purely to scalp. You're scalp trading, you're buying these swings, you're looking for small profits, and you're doing that repeat and rinse and repeat. We're looking for breaks over some significant levels. So number one would be, we're looking for a break over this level over here. So we're either looking, if the price comes down here, we're looking for longs at this level to push back upwards, okay? Or we're looking for shorts below here to send us down to 19,000. That is our target, okay? $19,000 if this level, this horizontal level, as you can see, has or gets broken, okay? That is our target. Now, the tricky thing is, shorting as this pennant breaks could result in a similar scenario as if you had to long when the pennant broke to the top side, because we have a lot of, like we said, a lot of these scam wicks below, a lot of these liquidation wicks below. It's very hard to actually say when this pennant has officially broken with a confirmed break. What we'd be looking for is a break nearing the end of the pattern. So usually when we have breaks nearing the apex of the pattern or further along the pattern, it's more likely that those moves will be continued rather than just short-term liquidity spikes to stop people out of their positions or shoot up and hit rejection resistance and just come all the way back down. So we're looking for maybe the next break will be a good one, but we're looking for that. All right. Another thing is we're looking for a breakout and a retest. So on these scenarios here, when we have these huge spikes, which we've seen, this is where retests are really important. So waiting for a breakout upwards or downwards, waiting for a retest and a support resistance flip or resistance support flip, whichever way whether you're longing or shorting, will be the ideal time to look for entries, not directly on that break. Okay. So we talked about the downward side, we talked about upward side. I'd be looking for a entry again if we do break over this level. If we look for a break over this level, I'd be looking for a short-term scalp. Now here's the thing. We've had a lot of candles above here, which haven't really resulted in anything but a pump and dump. And this is why I'm not looking for swing trades. I will look for a scalp trade above here, and I will assess my scalp trade position, moving my stop loss up as prices are reclaimed, and it could potentially turn into a longer hold to this level. This will be the next major resistance, similar to what we have over here, the major trigger zone. If this level is broken, we're looking for a continuation upwards, and if this level is rejected from, we look for a continuation back downwards. So we have two major areas of confluence in the chart, currently within a structure sitting between these zones, waiting for a directional move to reach either one of these zones. We have a plan. No matter which zone we go to, you now know what to look for. You now know what to expect within this range. Just continue to trade, continue to scalp. The good thing about these ranges, guys, is that it is a really good time to practice and improve your scalp trading. Generally, when we have these up-only scenarios like this over here, for example, or if we have to push through here, the trend is really strong and can be deceiving, especially when we have bearish divergences, we have moving average crossovers, and the price looks like it's going to retrace. You enter a short only for it to continue upwards. It's very tricky for amateur traders to actually trade aggressively into an aggressive trend, because they get, I would say, faked out a lot on the small pullbacks, which actually aren't reversals, just pullbacks. Generally, when we're trading in these ranges, we have very clear support and resistances, whether it be diagonals or horizontals. The only question you have to ask is whether I should be acting on these horizontals or diagonals or not. Not whether, if not, you don't really have to assess the strength of the trend. You just have to react on the structures. It's very easy compared to trading these strong trends upwards or downwards. Okay, let's take a look at the macro. So obviously the macro is looking iffy, guys. We're not going to lie, it's looking iffy. A few things to point out. We have got a monthly candle sitting right above our all-time high in 2017. A very important level we have to kind of remain above. If we lose this level, we can expect the price to continue downwards quite aggressively. In my eyes, that would be the trigger. Losing the monthly on that level will be the trigger for a move downwards to 19,000, and that sits at 19,675. So 19,675 is sitting just over this level. 19,675 it's around over here, so we're quite close to it. It's actually above this major horizontal support zone, so we're kind of fluctuating around that level, but closing a monthly candle in 24 days below that level would be very poor, very bad. We have a lot of economic news coming out in the month. We have CPI 13th, we have FOMOC 21st of September, we have the Ethereum merge, we have Mt. Gox's release date, which is I think the 15th or 16th, I can't remember off the top of my head, but we have a lot of stuff coming out this month which could influence the price. Also saying September is a horrible month for crypto. It generally is the worst month in terms of trading volume, performance, return on investment, generally the worst month. So we have to keep that in mind too. But I think people are going to get a nice surprise this month. Maybe if FOMOC comes at interest rates of 0.5%, we might see a rally. But I think for the next few weeks, we're going to definitely experience a continued volatility like we are seeing here. And I recommend most people not long-term trade right now. Hold their spot positions if they've got spot positions, and just scalp trade, really just scalp trade. DXY pushing 20-year highs, guys, 20-year highs, 110.3, I think we reached, 110.28, very high, highest has been in 20 years. Obviously, if the DXY is rising, that's telling us money is flowing out of assets back into cash, strengthening the dollar. And obviously, when the DXY is dropping, we know money is flowing back out of cash into assets, and asset prices are rising. So we had that correlation there, that negative correlation between asset prices and the strength of the dollar. Really important and interesting to keep in mind. And that's kind of all I want to talk about, guys. I want to talk one more thing about the weekly. And this 9-year trend line is lost as support. That is correct. We have closed weeklies below. I would like to see, if I go to weekly over here, I would actually like to see this candle here close below in 5 days, close below this low here to confirm the next move down. And if you take a look where this is sitting, it's sitting around the same price as this lower level here. And I'm sorry, my arrow over here, this lower level here, 919542. So if we do engulf that candle on the weekly, that would be the trigger for us to continue downwards, and that would be our first target, of course, on the way down, looking for a potential bounce point again there, leading into September. Okay, I'm gonna leave the video there, guys. If you have any questions, comment them down below. Thanks for watching. It's great to be back, and I'll see you guys all tomorrow for another video. Okay guys, we're going to be taking a quick look at Bitget, and now Bitget is where I personally trade. I highly recommend signing up to Bitget with the link down below. Bitget is probably the best exchange out there if you are a trader. It has a variety of features, and the best things about Bitget are a few things. Number one, it's non-KYC. Well, KYC is completely optional on Bitget. Now, there's a whole variety of exchanges out there nowadays that have gone completely centralized, sharing your personal trading information and information of decentralized governments and different governing bodies. Bitget allows that option to be left to the individual, to the user of the exchange. You can decide to non-KYC, you can decide to KYC. It's completely your choice. Another really beneficial thing about Bitget, and the biggest reasons why I'm sitting here actually recommending Bitget to all my followers, is that it has 0.02% trading fees. All right, this is significantly lower than any other cryptocurrency trading exchange out there. FTX, Binance, can name a bunch more, KuCoin. It is significantly lower, by 500% lower than the lowest exchange out there, Binance. Another big thing, guys, is there's no global restrictions on who can use Bitget. Anyone from anywhere can sign up to Bitget and get access to the entire... Okay guys, I want to take a quick moment to introduce the Become a Trader course at the end of this video. This course was designed by myself and Wolves of Crypto. We put together a whole variety of knowledge to create the most cohesive, understandable, and beneficial trading course there is on the market. If you're interested in learning how to become a trader, if you're interested in learning how to use technical analysis, if you're interested in learning how to apply market analysis to different cryptocurrencies, this is a course for you. We teach you everything from the fundamentals, the basics about what cryptocurrency is, how to trade cryptocurrency, mastering the craft of cryptocurrency, diving into a whole range of technical indicators, market structures, and teaching you how to utilize these when finding trades and applying risk management strategies to become more profitable over time. We even dive into market psychology, human psychology, and provide a variety of different videos and educational content, including courses and quizzes to assist your learning along the way. If this is something you're interested in, guys, go ahead and contact us down below at the cryptoacademycourses@gmail.com. We'll send you an email back with all the course information, the structure, the payment details, and everything else you need to know. That being said, guys, I hope you enjoyed the video today, and we'll catch you in the next one.